Hi, guys. Welcome back to my podcast, Get Wealthy with Me. Today, my guest is the Lisa LaFrance. She is a rainmaker, troublemaker, disruptor, and all about high energy, great gal. That's why we're getting along great.
Thank you, Sharon. Just same to you. I mean, you are a life force. So it's fun to just be in the same room with you.
Totally the same ditto. We're going to be making a lot of changes in the world.
And it's time. It's time for a change. I feel
It's
like
time.
2025 is a good year for things to get shaken them up.
Shaken up a little bit, yeah. And we're going to shake it up in a good way. And not everybody might agree
I
with
think
our good
different
way.
opinions are what make things
We'll
better.
agree to disagree, right?
Yeah. But we want all opinions to be considered, and then that's what makes a better decision.
That woman. Otherwise, we'd be bored. Wouldn't you be bored? If everybody agreed with you,
Yeah, we'd just be like living like Stepford Wives or something.
Yeah. We don't want to do that. So first, I want to talk about you. You, Lisa, before this Lisa.
Mm-hmm.
I think the disruptor has always been in you.
Mm-hmm.
But I want to talk about what you did before, where you're from, kind of like that.
Okay.
The softball questions.
Oh, well, I did play softball as a child. I am from a working class town called Taunton, Massachusetts, and grew up with parents that were very involved in the community, and that certainly shaped who I ultimately became. I was a great student. I loved learning, and I think that's also something I continue to carry through my life. I think one of the most important things is to stay curious, to always ask questions and always get answers to questions. And as we were just talking about, always include diverse points of view when you're trying to get to something. But back to where I came from. So growing up in a small town in the 80s, which I want to probably come back to, because if you're going to ask me about money, growing up in the 80s definitely shaped what I thought I wanted out of life. It was that era of, the Wall Street craziness and all of that. So I really, honestly, and I'm almost a little embarrassed to say it, but the way the story ends, it comes around. I just wanted to make money when I was young. I mean, I had a picture of a Jaguar up on my wall. Like, that was my goal. I was going to have like a sports car XJS. And so when I went to college, I had an advisor who was an economics advisor. By the way, side note, and it's important, I had a very strong interest in psychology and social work as well, partly from my upbringing. But when I got to college, my advisor said, if you want to make money, you should really pursue the economics track and ultimately go into business or finance. Or whatever.
Mm-hmm.
So that's what I did. And funny enough, when I graduated in 89, the economy was not great. So I did not end up in a finance job right out of school. I actually ended up at a PR agency. And what I loved about that, well, because it is part of like my background that I still use in my life. What I loved about that particular job is that we had a variety of clients. We had a variety of technology clients. We had actually an oil and gas company. Just a lot of different things that I learned about a lot of different businesses. And I got to go to a lot of interesting places, like doing a telecom conference in Geneva, Switzerland when I was in my 20s. But I also knew in the back of my mind that this PR was not really the best use of my skills. And I step back, I loved math. I am a math geek. And
we have that in common.
And I have a lot to say about that too, especially for women, because I think unfortunately, certainly then, and I feel like still today to some degree, so many young girls in school are told like, oh, girls aren't good at math. Yeah. Mm-hmm. And they get scared and like, oh, it's math. I don't like math. And that's just bullshit. So there's my first S-bomb. Okay. So anyway, so I loved math. So I wanted to move out of the PR space. And it was the accountant at the PR firm who said to me, I've got some friends who've just started a hedge fund. They're knocking it out of the park. You really need to go talk to them. And so that's how my investment career started. Now, I can jump into my career, but I don't know if I've really said enough about my background. Is there any more specifics about growing up you're curious about?
I think we're going to bring it back a little bit later. We'll bring it in because I'll ask you some questions culturally, like how certain things shape you. But we'll go around with the questions. But I think for my audience that I'm focused on is Gen Z and millennials.
Mm-hmm.
And I'll tell you why.
Mm-hmm.
Why is because they are open about money.
Mm-hmm.
Two is they're not only open about learning what to do with it, they're open to learning what not to do with it.
Mm-hmm.
Whereas our generation,
Mm-hmm.
Gen Zs, Gen Xs, and Boomers, we think money is a closed
Mm-hmm.
thing.
Mm-hmm.
We should keep it to ourselves. And honestly, either you and I, who supposedly has studied money, has looked at money, has worked with our money well, still have trials and woes.
Childhood trauma around
Yes.
money.
Yes. And we've made mistakes,
Mm-hmm.
right?
Mm-hmm.
And
Which is okay. To
which
make
is okay.
mistakes. You
Yes,
need to
that's
make
where you learn it,
mistakes.
right?
Exactly.
And so the thing is, even people who are good with money, it's a journey that they're on, and we make the mistakes, and we need to learn and share more about it, right?
Yep.
So that's why I'm focusing on that. So one is they're the generation of the future,
Mm-hmm.
and two, they're more open about these things, and this is the only way we're going to save the middle class.
Mm-hmm. Mm-hmm. I support that 100%. I think you're absolutely right. Yep.
So the openness about money, I think a lot of the Gen Zs and millennials, when they hear you talk about hedge funds,
Hmm.
they're like, "Oh my God, I want to hear more from her." You're about to become the most interesting person right now.
Well, okay, so I'm going to be honest. I haven't been in the hedge fund world for 10 years.
That's all right.
But I will tell you that when I was in the hedge fund world, I mean, that's when it was fun, now, because I don't. How deep do we want to get into market theory? I mean, there's
Talk about
there's a
whatever it is
thing
you want
about
it.
markets, like where over time they become more and more efficient.
Mhm.
So when you find an opportunity to make money and you start to exploit that and you start to be successful with that, everybody else starts doing the same thing. And once everybody's doing the same thing, game over.
Right.
And so a lot of that has happened with the hedge fund world, I believe.
Right.
Post my leaving it, and so. Especially given the hedge funds fees that they charge. I think the fees are way too high. Sorry, hedge fund friends. And you're better off just doing a low cost mutual fund, long-term buy and hold kind of strategy for the most part. You can sprinkle some exotic, risky hedge fund types of things around it. But the other thing is the regulation, which is good and great for the buyer. But I'll tell you, when I first got into it, you could do almost anything you wanted.
It was
in the
like
hedge
Bitcoin,
fund
huh?
world. Yeah, it was the Wild West, and people made a lot of money.
Yeah.
I don't know how much money there is now. What it's about is the people who are the biggest. And it's just reflective of our whole world now, right? The society, like the big gets bigger, and the rest of us feel like we're getting a little bit left behind. And yeah,
So what would you tell someone that is thinking about getting into investing in general?
with starting from zero.
Yeah, like a young person who wants to, make stock market investments as part of their portfolio.
Mm-hmm.
What would you tell
I mean, I think the first thing that we always ask people is, what is your time horizon? And what is your risk tolerance, right?
Right.
So, do you need the money tomorrow? Is a very different approach than I'm saving this money in my 401k or my IRA and I don't need it for 50 years.
Right.
Those are two very different things. The risk tolerance thing is important because no matter how much you can convince your clients, I'm talking about it from like an advisor perspective, but to our audience, we could sit here and convince you that you shouldn't be concerned about risk so much. If you do get nervous and you sell it, and that causes you to sell at the wrong time, the whole plan gets screwed up. So you have to be honest with yourself, with your advisor. How much risk are you willing to take? If you wake up tomorrow and you're down 20%, how's that going to make you feel? So once you talk to somebody about those very important parameters and what are their goals, are they saving for a house? And that kind of all comes in together. Then you talk about the type of investment they want to make, from very conservative to very aggressive. So, and the bond market has always been known as, the kind of the safer conservative side, income producing types of investments, all the way up to, now in the stock market, and then the riskiest part of the stock market, which are, the growth stocks, the tech stocks. They're very volatile. You can make a lot of money, you can lose a lot of money. And then even beyond that would be venture capital, investing in a startup business. And those are the things that I mean, personally, I would suggest everybody dip their toe into, because I think it's important not to be too risk averse. I think a lot of people miss out on opportunities because of fear.
Yes.
And because and we can talk later, I hope, a little bit about mindset. I know that's
Yes.
something you're
Yeah.
very
No, I think you
passionate
should bring that
about.
in right away.
So if you have a scarcity mindset and you're so afraid of losing what you have, you will always just have what you have. And maybe that's okay.
That's
Again,
okay,
that's
yeah.
where you have to get the whole picture from somebody's financial situation. But if you've got, a small nest egg and you're looking to turn that into something that you can retire on, you're probably going to want to take a little bit more risk. So that's why I say build a very diversified portfolio. And one of the things that I like to talk about, not only with investments, but with philanthropy, which we'll
Yes.
probably get to in a little
Yes.
bit too, that's my current passion, is start small, right? I mean, if you say, especially in the nonprofit world, right, one of the reasons that donors don't give so much is because they don't know what they're giving money to.
Right.
They don't understand what the actual outcomes are. There's a lot of opacity. There were in hedge funds opacity too, actually. But in nonprofits, they don't really understand what they're investing in or what they're giving money to. So if you just give a small amount and you start small, watch it, get to know the people over time, give a little more the next year, a little more the next year. Now you're starting to build trust, you're starting to build comfort, you're starting to understand what's actually happening with your money or with your philanthropy. And now that risk starts to feel less, and then you feel like you can give more. And so, I mean, I think one of the most important things in that context is start early, right? So that
Right.
you can start small and build over time and build that experience with real investments and learn through that process. And no amount is too small. I mean, you can open a Vanguard mutual fund account for $1,000. Now,
So that's what I was wanting to talk to you about. If you have an
yes.
18-year-old or a 20-year-old and their mom or their dad gave them $1,000 or $2,000, what would you tell them to do with that?
Well, I would tell them to do what I've done for my son, and I put in a Roth IRA.
Yes. Agreed.
Thank you. Okay, we're done.
Agreed.
Yeah.
Is he self-managing that though? Did you have him
Nope.
self-manage that?
Right now, that's all at Vanguard. This is not a commercial for Vanguard, but I did work for John Bogle Jr. So yeah, I mean, Vanguard is a low-cost mutual fund
Right.
provider, so
Yep.
that's a beautiful thing about
Yep.
the Vanguard platform. So it's managed at Vanguard. Now, again, given this approach I'm talking about is sort of ramping up risk over time, over your life, he may choose, and he does have other money that he kind of plays around in the stock market, again, just as a way to, learn, actually.
Right.
You
So
know?
so my kids, since we're taught, we brought it down to the children always. That's the first thing we did with my older son, and my younger son just had a job, a summer job. So we're gonna do that with him for 2024. But I also just started them with little accounts. Like during COVID, we started little accounts so they can play in the market and learn.
Can I give you a quick funny example?
I want it.
When my son had but when he was playing around with his stock portfolio, he said, "I really want to invest in Spotify," and I knew in my heart that was a really bad idea. But I said, we had an open conversation about it, and at the end, he was like, "I think I want to do it," and I said, "You know what? I think you should actually." And in my mind, I'm like, "You're gonna probably lose a decent amount of money," but it's almost like
It's
you're
a learn.
investing
Yes.
in learning.
Yes.
So if you can look at it that way too, then it's back to what I said earlier too. It's okay to make mistakes. You grow and benefit from that ultimately.
So I just did a video on I don't remember what it was because I've done a lot of videos, but one of the things we talked about is actually I don't believe if you're spending money for the right reason, the way I approach spending is what am I investing in? And it's not necessarily a monetary return,
Thank
right?
you. Very
Going
much
back to
important philanthropy.
yes, going back to philanthropy, it's what are you doing this for? What you're investing your time, you're investing your money, you're investing your knowledge, which you've done all three of those, right? What are you doing it for? What are you getting back? Right? And a lot of the times, and both you and I understand this, it's not about like you're getting it's a transactional thing.
Right.
Right? A lot of people do not understand in business also, it is not transactional.
Mm-hmm.
If you look at life as transactional,
Mm-hmm.
I think you're losing the whole point.
Mm-hmm. I would just suggest a modest modification of that statement, because I have thought about this a lot too, and
Yep.
thought like you do, like transaction kind of almost feels a little icky, like it's almost like a prostitute, like that's transactional relationships, but it's okay. We can be transactional. We just need to make sure that's not all we are.
Right.
So, and I think about that a lot when I talk to potential donors. It's like, you can give for whatever reason you want to whatever you want. That's okay. But try to think about doing something even more that will be more impactful than a pure transaction.
So when I speak about the transactions, yes, I feel that way, but even when somebody's giving something, even before they do that, right? Or they're putting forth something, not necessarily their money. Let's just for example, we're networking,
Mm-hmm.
right? I've never been able to be a part of a BNI or an MPI group because everything is transactional and
Yes.
I can't do it forcefully.
I agree.
I have to give forth my best self.
Right.
And then you might not get something from me for a year, but then all of a sudden, because we have that relationship,
Mm-hmm.
you're going to get everything from me
Right.
for the rest of the
Right.
time.
And that's about trust and patience, right? And this goes back to like some of the concepts I've been trying to talk about too. If you trust somebody, or if you feel confident and secure in how your money is invested, then you can go through periods of time where nothing happens, because at some point it will.
Well, how do you build that trust? Like, you
That-
got to build it,
Yes.
right?
So yes.
You got to invest in building it.
Yes, right. So communication is huge, right? And so if we want to take it back to the investment conversation, just educating yourself. But now we could get into some gender dynamics if you wanted to do that as
Sure.
well, because I've talked to
It's
a
no holds
lot
bar.
of women about investing, and a lot of the time they will find themselves with their male significant other in a meeting, and the men dominate the conversation, and the woman
Absolutely.
not only isn't allowed to speak or doesn't feel like she can be heard, but she also, now it reinforces a feeling of like, I don't really know what I'm talking about. So it just develops that sort of insecurity about just saying, like, no question is a dumb question. I ask stupid questions all the time.
Me too.
Again, it goes back to curiosity, right?
Yes.
If I don't know something and I think I should know it, well, I better ask and find it out so I do know it.
Yeah, because then you're never going to know it, right?
And you're going to make poor choices when you
Yes.
don't have all the information. This is market efficiency theory, right? The more information you have, the better choices you make.
Right. And I mean, I don't understand those women. I do understand that they're there. I understand but they're not me and you. So when we're having our conversations, that's not how it works.
Right.
So
But that's the reality for so
It
many women,
is,
and
it
it's
is.
unfortunate
It
because it's not
is.
their fault. It goes back to the school experience of being told they couldn't do math, and now the lived experience of being in a social dynamic where the men are controlling the conversation and they don't think their voice is worth being heard. And that's not true, ladies. Not true.
not true at all. Actually, I think your voice is probably better.
Mm-hmm. Yeah, I mean, we tend to. I have a question for you about
Okay.
women and investing, but I do want to just say, I mean, I think women tend two things. You talk back to the transactional thing. Women naturally, in my opinion, are not as transactional as men, which means that if we are moving toward a society where transaction-based relationships are evolving into something much more meaningful, that is the moment for women to rise and shine. So that's number one, part of why I'm so optimistic about 2025, is I feel this is something that's happening.
All right.
And then the other thing, what was the other thing I was going to say? I don't know.
She had a brain fart, but she'll remember. When she remembers,
I'll
she's
be
going to
back.
just chime in. She's going to chime in.
Yeah.
So we were gonna talk more about women and investing,
Mhm.
and what are our thoughts on.
Oh, I know what my question for you
Okay,
was.
tell me what your question.
There has been a perception that women are risk averse and much more risk averse than men. We might have talked about this before. And I think that that's flat out wrong, frankly. I think that we just want information. We just don't want to make choices blindly.
Yes.
That doesn't make us risk averse. It just makes us smart about risk.
Yes. So I call it calculated risk. Okay.
Exactly.
So like a lot of times, my husband thinks I'm too risky.
So
And
does
I'm
mine.
and I'm crazy. Half of the times he thinks what I'm doing is crazy. But it's worked for us, right?
So is it for us.
So then I say, I go back to him like, when have you known that I take a risk without actually doing all my research, asking questions, talking to different people, and then I go into it? Yes, it's a risk, but I've calculated it.
That's right. That's right.
So it's happening. Sure, I make mistakes, right? Sure, we make mistakes with these, but that's all part of the process.
And I feel like for me anyway, I would curious how you are in your everyday life. Like every decision I make is risk return analysis. What am I going to have for lunch? I don't know. Am I feeling like I want something healthy? Am I feeling like I can indulge in a cookie? What's the end result of that? It's every choice and decision we make has that component.
So going back to what I just said about an investment, right? When we talk about money, right? And I talk about spend, I don't talk about spending. I talk about investing. So it's the same thing. If I'm going to buy this something, what am I buying it for? How is it going to serve me? How is it not going to serve me? So because I think like that, sometimes I mindlessly do buy that pair of shoes. Because consumerism is alive and well.
And it has to change because we're killing our souls and we're killing the planet.
Oh my God. That we could talk forever on. We're going to have to come back on that one. But consumerism is alive and well, and it is brainwashing us. I mean,
look at those social media ads we get every day. It's like, how did you know I wanted those?
You're on TikTok looking at something for philanthropy, right?
I know it's a
all
hard
of
word
a
to say.
all of a sudden, you're looking at a charity or something. All of a sudden, a hair dryer comes up, or whatever it is.
Oh, those little, yeah.
So it's more than ever, getting us to buy all this shit
that we don't
do not need.
Yeah. Can I do a shameless plug for one of my nonprofits?
Go.
Resource Depot. I'm on their board, and they are all about repurposing, reusing.
They're down here in South Florida.
You know them, right?
Yes.
So in many ways, they've helped me really adjust my thinking. But what was really, they have a manifesto of enough, right? We have enough. And I think you used that word a little earlier too. And when I decided to retire from investments at the age of 45, I read a book.
I want to be her when I grow up.
No, you want to be you when you grow up. But I read a book called Enough. And it was really about like, how much wealth can you accumulate until it starts to be meaningless? Like the money happiness curve flattens out at a certain point.
It does.
So why do we continue to be so driven to accumulate more wealth and therefore more stuff when that's really not going to bring us any more happiness? And so I based my decision to retire partly on the insights and the revelation, the aha moments from reading that book and saying, you know what, I don't need much more than this. I know what it takes for me to have my annual lifestyle, and I know what I have, and I've got a spreadsheet, and I think assumptions, of course,
right?
But it should be okay. I think I'm going to be okay.
But so I have a back question on that for you.
Okay.
So, were you not? Is it a happiness level with the retirement decision at 45? Because for me, building the wealth means that I can give more, and I can do more, and I can spread more. So it's going to give me some type of an independence because, like I said previously, gratitude does make everything enough. So when I was making $8 an hour, if I felt at that time it was enough, what's happening now, it is still enough. I do have the ambition for more because I have plans. I have plans for all of that.
Sure. So you're like living the enough in the moment strategy.
Yes, absolutely.
And I don't think I really did that, although I don't think any of this was conscious or intentional. I think I got on that hamster wheel of, again, 80s, make money. And at a certain point, I said to myself, why am I doing this? Am I truly happy?
Right. You're
Um,
evaluating it. Yeah.
and again, this is how the universe works. I'm getting a little spiritual, sorry, but and again, it comes to the mindset and not having a scarcity feeling, right? So, because I retired and I felt like I had enough, and I had enough actually even for some considerable
Enough for the future.
philanthropic portion of what
Right.
I wanted to do. I could not have thrown myself into my work with the nonprofits in this community if I wasn't retired.
No.
And the passion that I have for that work, it requires full time.
It requires.
So it turns out that it was a good thing I retired. But what's funny about it too is now that I sit in this spot and I've gotten to see the great work going on in the community, you're right. I mean, gosh, do I wish I had an extra, $1 billion to give away? But now my new approach is, and again, always try to sell something you love and believe in. I want to bring other people. It's sort of like collective philanthropy, which we both know very well.
Absolutely.
If I can influence, help to inspire people to also give, then that will be my way of giving even more than I personally can.
Right.
So that's
Right.
really where my mission is driven right now.
So I absolutely love that. And when we talk about enough, right? I don't think it necessarily is only money, right? You're giving time.
Mm-hmm.
You have the money aspect. You can inspire other people to do the money aspect. Then it becomes more collective that way. But also you're inspiring other people on the time parts of it. So, and you're using, right, then you're using the money, maybe the allocation of it may change, right? But you're allocating your time and your money, and each one is enough. So,
And the time and the time spent in the community doing the work with the nonprofits, with the people they serve, with the people that want to help those nonprofits, the donors, the funders, that time spent is an investment in happiness and purpose. That is
Yes.
my purpose.
yes.
And I can't tell you how good that feels to have that in my life.
I understand that because my purpose is financial literacy. And even helping all these non-for-profits to bring financial literacy into their perspective passion to help not to band-aid situations, right? To bring it where we're teaching everyone how to use the monetary gifts that they're given to go further.
Would you ever do I'm asking her on camera here. Would you ever do a workshop for some of our nonprofit leaders about financial
Love
management?
to do it.
And because I'm going to tell you something, and my focus is largely in the smaller nonprofit space. These leaders of these small nonprofits talk about, giving all the time in the world and not necessarily getting much in terms of financial
I used to work for the Red Cross. I know.
compensation. So they struggle personally with their finances. They're like, they don't, and I think that would be a wonderful thing to maybe start.
I would love to do a workshop because literally, ask Chala. I talk to anybody who would listen to me about finances because I feel like understanding their mindset, because I don't do a budget, and I know we're going off topic here a little bit.
I'd love to talk budgets with you. You should see my spreadsheets.
But I don't do a budget with people unless I understand what they've done. So I think of the Dave Ramsey way of doing things. First of all, I think it's
First question, who's Dave Ramsey? I don't even know.
you don't.
I don't know who Dave Ramsey is.
Oh my gosh, Lisa, doesn't know who Dave Ramsey is. I can't be you're lying.
No, I told you I ask stupid questions.
Oh my
I don't know
God.
who David Ramsey
First of all,
is.
I like how you raise your hand because I learned this from another podcaster. He said, instead of interrupting, raise your hand because then they know you won't have something to say. So I like that. Number one. Number two, Dave Ramsey is this financial guru. When you leave, you have to look him
No,
up.
please trust me, I will. I'm going to become his best friend
From
now.
the 90s. From the 90s.
Like a Susie Ormond. I mean, I know
Yes.
Susie Ormond.
Oh, I know
Okay.
Susie Ormond.
Okay.
Yeah. But he's not from so he believes in the scarcity mindset. He believes that you should only have a 15-year mortgage. You should be completely out of debt before you do investing. He believes in cash stuffing.
And you agree?
I disagree.
Oh, good. Okay.
So I believe that some of his thoughts about budgeting and different things, he has the right idea.
Can I interrupt again?
Yes, go ahead.
I mean, can can we just show why very basically this is wrong? In a low interest rate environment, when you can borrow money like we could for a long time
Oh
at
my
like
God,
3%
yes.
and turn around and make 10% fairly low risk,
With somebody else's money?
why would you not leverage as much as you could? I mean, I had money. I had every property was leveraged that I had. My homes, I took mortgages.
Yes.
I didn't need to take a mortgage.
You didn't need
but
to.
I was
No.
getting 3% money.
Yeah. Why would you? Why
So,
would you pay for
people.
it cash?
Yeah.
That's just it.
Yeah.
So that's my point. Number two is nobody spends cash. My audience, Gen Z and millennials, don't even have cash in their wallet.
Or checkbooks. No, like,
Oh,
what's
I don't
a check?
even
I don't.
like what's a check.
Yeah,
Like
yeah.
nobody does that. Two, responsible credit cards can be a golden thing if you use responsible credit cards.
To handle whatever.
If you want, pay the credit card off every week. I don't care.
Yeah.
But you can track that.
Yeah.
There's all these apps. So if you don't understand what you're spending your money, have somebody ever come up to you and said, I'm broke, but I don't know why?
Yeah, and that was the other thing I was going to challenge you on, because you said something about budgets. And I think everybody, they don't necessarily have to have a budget, but they need to know what they spend every year.
So that's how I start people off.
Yeah.
First, I tell you, if we're going to start a budget, I want you to track what you spend the last 3 months.
People don't like to even look at it. Because they know that they're going to like feel bad about it.
So that's the other thing, right?
Yeah.
That's what the budget, that's how you make your budget.
Yeah.
Is understand what you've spent.
Yeah.
Right?
Yeah.
Do you want to do that now?
Right.
Right? Like now you're going to make an intentional money
That's
decision.
Right. 100% agree.
And I am an intentional money manager.
Mm-hmm.
You manage everything. You don't want money to control you. Well, then you got to control it.
That's right.
You got to make that choice. The choice that we don't have is finance is a part of our entire lives.
Mm-hmm.
With not-for-profit, it drives us. We have to pay attention to the budget. In not-for-profit world, everything is budgeted.
Mm-hmm.
Like there's no way that
and it's
not
one of
getting
the
budgeted.
problems with not-for-profit the system for nonprofits, because they can't take big risk. Back to the whole risk thing.
So understanding how that works, going back to that, we're gonna have to have another talk about the budget with not-for-profits. But the thing is, if you don't understand the mindset behind what you're doing, why did you spend this much $500 on Starbucks last month? You don't know why. That means you did not control that. You weren't controlling it. You were mindlessly doing it. So before I even work at a budget, I ask you to track your 3 months. Mm-hmm. Because the one thing that you don't have control of is finance is a part of every part of your life. Mm-hmm. It's a part of your giving. It's a part of you still needed a car to come here. So you still needed money. You still have to have money with your time. You still have to have the money to invest the time to do the work that you do. Mm-hmm. So it's a part of our lives. Mm-hmm. Whether you're going to do good with it or you're going to do bad with it is your choice.
Right. Right. And to your excellent point that I try to preach to all of my friends who ask me to help them with money, the first thing you need to be aware, right? And so the question I would ask but we didn't get to talk about this too much, but I mentioned earlier that I had a psychology interest as well. And so ultimately I have really brought together the psychology and the economics.
The psychology of money?
Well, yeah.
Psychology of economics?
Even in the hedge fund, when I was working in hedge funds, we exploited a lot of psychological tendencies in order to make money, because people behave irrationally.
Yes.
And so this idea that you wouldn't actually be you would be paralyzed to open up your Amex statement for the last 12 months and see what you actually spent is a psychological thing that is so counterproductive. And if we can solve some of these psychological blocks, we can really open up the
we might save the middle class
for money and risk taking. And yes. Do we still have a middle class?
It's very, very small.
That's my question, and it's not good for society.
It is. That is one of the things that America thrived on, is having a middle class.
Yep.
And we are losing it.
Yep. And I don't think that the people up at the top there that are continuing to benefit understand where this ultimately ends for them. Even.
Yeah, I don't either. And I think part of the issue with the middle class is we're exploiting so many different things psychologically with them. It's not that they're not having enough, because I've done tax returns for a living for 3 decades. I see what people make and I see the life they live, and they don't correlate. I seen people live on $100,000, send kids to private schools, buy houses, and go on a vacation.
Mm-hmm.
Then I see people that make $500,000 to $1 million and does not have a pot to piss in.
Mm-hmm.
You've
Because
seen
they're
that,
buying
Lisa.
the Goyard purses for all their family, and not that there's anything wrong with that, but
There's nothing wrong with that, but if you want a pot to piss
I
in
hope my
later,
friends that bought all the Goyard purses aren't listening right now.
I'm so glad I don't know what kind of purse that is. So I don't have to buy it.
But now you know.
Now I know.
Now when you get on
like,
your social
Lisa,
media later tonight, Goyard purses are going to pop up.
They're gonna pop up in my social media. Oh my god. So I mean, but it's okay if you're doing that. But then opportunity cost, right? Remember in economics class we talked about
I
opportunity
talk
cost.
about opportunity cost all the time.
So if you're giving up the money for that purse, only
Right.
so much.
You could buy the $2,000 purse. I think it's the wallet's $2,000, or you could invest $2,000 in an IRA, and let that money grow and work for you from a financial security perspective, or you could give $2,000 to your favorite nonprofit and be just so happy that you've helped other people.
All of those three things you get an emotion from.
And all three things are part of my life. I mean,
Yeah.
I've got nice purses, I've got investments, and I've got charity. I mean, as you say, everything is financial at the end, and you want all of it. You just got to figure out the right mix.
Moderation.
Right, and the right mix for you.
The mix is the moderation.
Yeah.
Okay? We don't want to swing like Tarzan. That's how we've
No.
been doing it.
Yeah.
Every aspect of our world, and I'm just going to say one thing about politics, is that's what's wrong.
Yeah. Yeah.
We're swinging from one end to the other,
Yeah.
right?
Yep.
But most of us are in the fucking middle.
Yeah. 100%.
And if we decide and we moderate, how much better? Like you're moderating, you have your certain purse, but you don't have a million of them. You go on your little vacations once in a while, but you don't go on a vacation every day.
Mm-hmm.
You're giving of yourself, your time, your money,
Mm-hmm.
and you live moderately.
Mm-hmm. Mm-hmm.
So that's what my
And
thing
that's a
is.
full life.
That's
right?
a
That's
full
a
life.
full life.
And all of those things give you some sort of pleasure, some sort of feeling. That's what your purpose. You're living your purpose.
Mm-hmm.
So that's what I'm talking to my audience about.
Mm-hmm.
Is moderation is the key,
Mm-hmm.
because if you make gratitude, if gratitude makes everything enough, and you do that in your life, I'm not saying you shouldn't have ambition.
Mm-hmm.
You and I got a lot of ambition.
We wouldn't be here. if we
This
didn't.
room is full of ambition. It's exploding. But we're moderately, we know what our ambition focus is. It's not a one track
Not
focus.
rampant, undisciplined ambition.
Yeah, it's not.
Focused ambition.
We don't have a one track mind, money, 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 money. Our ambition spreads about our happiness. What truly makes us content. And in the end, that's what money should do for you. It's because, and it doesn't mean you should, if you sit with it with a bunch of it at the table, that's what makes you. It's not. Trust me, it's not. It's not going to do that. Learning
you feel
how to
a little
moderate.
bit bad about yourself sometimes.
Right.
You know?
How many millionaires do you know that are so unhappy?
Yeah. Yeah.
They have all the money in the world.
Yeah. Well, that's my curve thing again, right?
Yeah.
You need a certain amount.
Yeah.
And then after a while, it just, the utility, kind of just tapers off.
Yeah. And sometimes you're more miserable on the other side.
Yeah. Well, that's what, you're right. It probably goes like this.
Yeah, because what they're doing is, they don't get
You
that
start chasing it too.
Yeah, they don't have the aha moment like you. How many people don't say to themselves when they are more in love with just the dollar, right? They're not living that moderate life, or don't get that light bulb like you did.
But I also think, and to say a little bit gender again, men versus women and how we view the world, but also certainly in the hedge fund universe that I lived in for so long, the money also became the way to keep score, right? So if your whole self-worth is based on I've got more than the next person, right? Because that's another big part about happiness theory, is that we define our happiness by comparing ourselves to other people. So, and gosh, if you live in Palm Beach, throw that out the window, because you'll never have as much as that other person. You know what I mean? So you just can't judge your life or your happiness.
How about if
by-
you live on social media, which all of us do?
social media has a purpose, and I try to harness it, and I try to use it
We're
for
learning
good.
it right now,
But
both of me and you and I,
I'm trying to
okay?
harness it for good. But it is, I do worry about, younger
because
people.
because that's what, like you're saying, like we and someone has told me this before. They said, years ago, your neighbor, we spend a lot of time outside, right? And you would see your neighbor drive in and you'd see what's happening, but you knew sometimes when they were fighting in their house or whatever. On social media,
Where did you live? No, I'm kidding.
on social media,
Ugh,
the keeping up with the Joneses
Yeah.
is at a different level.
yeah.
Because you only see the happiness.
Yeah.
You don't see when they're having an
That's
argument.
such a good point. Right. And a lot of it's right. So in other words, it's a fake.
It's fake.
We live in a fake
It's a half.
world.
I'm not even going to say fake. It's a half truth.
Yeah, that's a good point.
Because
it's true, but it's not the whole story.
it's not the whole story. Right. It's the half truth. So you're seeing part of the story. You don't see the other part. Don't believe that this is the only part.
Right.
But that's what's happening.
Right.
That's how we're keeping up with the Joneses.
Right. And we're running a race that we're just going to die of exhaustion. It's not worth it.
Yeah, because it's the hamster wheel. It's going around.
It's not worth it.
And you have to get out of that mindset. Trust me, you have more than the person that have. You will always have more than somebody and less than somebody else.
It doesn't matter.
It doesn't matter.
Be in yourself.
Gratitude makes everything enough. If you're grateful for what you have and have your ambition to what you want, your purpose. So I've been talking a lot about purpose lately. So tell us a little bit about your purpose. Yeah.
Well, I think my purpose has been philanthropy and nonprofits, and what I've come to learn, because it's been a tremendous learning experience and curve for me. I didn't go to school for this, and I don't know what I don't know. And
School of hard knocks right now.
Well, I think that this is a legitimate dynamic in the philanthropy world, where you've got your funders and you've got your nonprofits, and your funders have perhaps made a lot of money, have wealth from successful businesses, successful careers. So they kind of think they know a lot, like they know everything, maybe even. And so they come to this nonprofit space thinking, I can help them figure out how they should do this and they should do that. And that's just dead wrong, because these people have been working in these communities, working with the people, working with the problems. They know what they need to do to try to fix these problems. And until we as funders start to listen to what they really need, we're going to be not investing wisely. So anyway, so my purpose has become not only to support wonderful nonprofits, as I've been fortunate enough to do in the last 5 years, but to start to think about how do we redefine the philanthropy paradigm, for lack of a better word, and how do we redefine the donor nonprofit relationship so that power dynamic shifts a little bit, so that the donor comes to the nonprofit and says, what do you really need to succeed and to accomplish, your goals and to solve these complex societal problems? And so that the nonprofit answers that question, and then the donor says, or the fund or the nonprofit says, what do you need from me to take that leap of faith, to make that investment in this solution? It may take some time. It's going to require patience. It's going to require trust. How do we work together to build that trust so that we can solve these problems together?
So one of the things that I've been doing a lot with my new company, with the Modern Savvy CPA, not my tax conservative life, is understanding brainstorming. Okay. And my suggestion on this topic here is both of these parties bring a lot to the table. And sometimes when the donors are coming to the table, yes, they're bringing money. They do have some knowledge, but they don't know everything. Right. And then the nonprofit is in the trenches, right? They understand the purpose of the community. They understand what the goal is of what the purpose of their non-for-profit is, but they might not understand, and I'm going to come back to where the financial literacy part is. They might not understand looking at it holistically on both sides. So if we brainstorm together, then there's a middle.
Yeah, it's about communication. It's about the conversation. It's about feeling like you're in a safe space to be honest and
Honest,
open and
yeah.
frank. And even if you think it's a bold thought or whatever, let's air it all out. Let's get to understand each other. Let's have some productive communication. And then that's the way that we can build trust and hopefully move forward. So
I love that. I cannot wait to work with it with you. I fully invested right now. I intend to bring all of what I am going to bring to the table and hopefully eventually bring some of that money too.
we value everything that you can give. Just your energy. I have to tell you, so I haven't mentioned yet, and I know that this might the January 13th
Yes, talk
event
about that. We haven't even gotten to that yet. So go ahead.
I know. So anyway, this event on January 13th, it's about bringing philanthropists and nonprofits together.
Okay, so just talk a little bit about the event. I know it's
Okay.
going to be over by the time we
Right.
go, but
I didn't know
we
how
might
much I
have
should
cli-
say, but yeah.
But tell us
Okay.
a little bit about it.
So there's a gentleman named Dan Pallotta who gave one of the most watched TED Talks on YouTube. It's been one of the most watched. It's definitely the most watched on philanthropy. And basically, the title of the TED Talk is Why Everything We Think About Charity is Dead Wrong. And he just talks about a lot of the things I've been talking about and how nonprofits will never solve these huge problems that we're tasking them with if they are not allowed to take risk, have a long-term perspective, make mistakes,
Absolutely.
So, we ask our nonprofits to be so accountable that it causes that inability to take risk. So that's part of the conversation. Anyway, so this event, Dan Pallotta, who's so now a pioneer in this whole conversation, is going to actually appear, or did appear, live virtually for a 1-hour Q&A. So we're going to get to pick his brain, not only about everything that he's gone through himself in the nonprofit world, all of these insights that he has and has shared through his TED Talk, and now he's written a book and he has a documentary and he speaks on this topic all the time. The TED Talk, interestingly, came out in 2013. And he was ahead of his time, in my opinion.
Right.
World wasn't ready for it.
And what,
I think we're ready.
You think we're ready?
I
All
think
right.
we're ready to
I'm
start.
gonna be at that.
Yes.
We will be at that together.
Yes.
I will have to probably write my little notes down because I want to know. I'm gonna have a lot of questions. I always have questions. You know that.
I know. Well, that's what we want. Again, no stupid questions, open dialogue, communication. That's how every relationship thrives.
And in some situations, like, you have to give that little bit of freedom. You have to be able to work with them a little bit. And that's where meeting of the minds come about, right? So I'm with you on the meeting of the minds. I'm with you pulling this together. I can't wait to see what you do. And you definitely have to come back and talk to us.
Okay.
We're going to talk more about that possibly on our next podcast. We'll talk about how that went.
Yeah.
And since I'm going to be there too, we're going to.
Oh, that'll be fun.
We're going to.
But I mean, I'm happy to talk more about investing stuff too. I don't know that we really went that much into it, and money mindset and how I grew up, and my father controlled the checkbook. I love my father, nothing against him. But that was the dynamic, right? And there's a lot of stuff about that I think would be fun to unpack at some point too.
I definitely think that understanding women and money through our fathers, because it was similar in my household, but understanding, because our culture, like I've talked with my other guests about how your upbringing brought you with the money ideas that you have. Like, for example, I come from an immigrant background, and we're all about scarcity, right? We're the cheap ass people that you can think of, but we also have a discipline that we bring. So when I do my money mindset things, I wish my dad, when I was saving my $3, he told me, girl, go buy a Disney stock. But in immigrant communities, they don't do that. They want you to invest in real estate, because my culture believes in 3 things: investing in land, investing in gold, and investing in education. The stock market is too risky for them.
My father was, I guess he was a second generation immigrant, but it sounds very much like my father. Never invested, eventually invested in one stock because he was on the board of a bank, and so he ended up with some bank stock.
Wow.
So again, another conversation. My mother was the one that invested in the stock market. So
I
anyway,
love it.
yeah.
All right. Lisa is going to have to come back.
Yes, I would love to.
Thank
This was
you.
really fun. Thank you, Sharon. Thank you for inviting me and
No problem.
into
You
this
have to come back.
space and this conversation, and it's so important.
We're going to
So,
continue talking. We're going to
Awesome.
continue. We're going to be the next Joe Rogan. Or call your daddy.
call me daddy, or call
whichever
your
one,
daddy.
okay?
Call
Yeah.
my daddy.
Thank
Oh my
you.
God. All right. Bye.